welcome back to Money Talks. I'm Mia Lee, escort, stripper, CPA, and recovered banker. Today, we're going to talk about a very unsexy topic, and that is taxes for sex workers. I'm going to give you the full disclosure that while I was a CPA working in finance for 12 years, I never did taxes for money. I restructured companies and did forensic accounting. I did, however, volunteer for VITA, which is the Volunteer Income Tax Assistance Program, where I prepared tax returns for low-income filers, and I also do my own taxes as a sex worker. Let's dive in. The most common question I get from sex workers is, what do I say I do for a living when I file my taxes? I'm going to tell you to tell the truth. Most of us are going to file as independent artists or entertainers. That's NAICS code 711510. NAIC stands for the North American Industry Classification System. These codes are what the IRS uses to determine whether tax returns are accurate relative to other businesses in a given industry. Personally, for the avoidance of any doubt, my tax return says that my job is adult entertainer. This is coded to the same tax code as other independent artists or entertainers. Many people have asked me, should I just say I do a different job that's legal? For instance, if you escort and that's an illegal job, should you say that you do consulting? Absolutely not. You need your income and deductions to match your stated job. And there is not a snowball's chance in hell that your income and expenses as an adult entertainer are going to match consulting or life coaching. By the way, the latter, life coaching, is actually considered a high-risk business by both banks and the IRS because this type of business is often used by people who are doing a different illegal activity and using it to launder their money. You can thank your drug dealer for that. The thing I want to point out as an example is that even though I have an active CPA license, I no longer practice accounting for money. If I claim on my tax return that I'm an accountant, I run significant audit risks because my income and expenses wouldn't match that of other accountants. Why so many cash payments? Why so many payment app transactions? Why are there all these checks from a strip club? And why do I have all these deductions for sex toys, condoms, hotels, and travel? This is usually when sex workers ask me, well, why can't I just claim that I don't have any expenses so nothing mismatches my stated lie job of event planning? And that's a fair question. But let me reframe it for you. What kind of business has no expenses? That's a trick question. No businesses have no expenses. It's a red flag in and of itself to claim no business expenses because the IRS expects businesses to have some kind of allowable expense. Now that we've gotten that out of the way, I want to explain a little bit about how to understand the Schedule C for business income. If you're self-employed or running your own business, which all of us are, getting familiar with the Schedule C form is really important. This is the document you're going to use to tell the IRS about your business and your expenses during the tax year. Essentially, it's where you detail every dollar that you have earned from your work minus all the costs you've incurred to keep your business up and running. These costs can range from advertising to supplies to travel expenses directly related to your work. The bottom line on this form is your net profit or loss. That plays a big role in determining how much you owe in taxes. It's also a good way to track your business's financial performance over the years. Now, diving into this technical side, Schedule C is divided into several parts. Part 1 is all about your income. This is where you report the total amount that you've made through your services. I personally break out my income based on the payment methods. I have my total cash income, my total income from Venmo, Zelle, Cash App, crypto, et cetera, and my checks from my strip clubs. This is also where you're going to report any 1099 income. My strip club also issues me a 1099. Now, I don't want to double count my checks against my 1099. I basically report my 1099 income in part 1 of my Schedule C, ignoring the individual checks I get because in theory, the total number of checks I get should match the number on my 1099 from my strip club. Part 2 of the Schedule C is where you're going to detail your business expenses. This is where you're going to report all of the money that you spent on condoms, dungeon gear, house fees, pleasers, et cetera. Part 3 really deals with cost of goods sold for businesses that sell products. That doesn't apply to most of us. I'm just going to skip over that one. Then just remember that if you use your vehicle for work, part 4 of the Schedule C is going to ask you about vehicle expenses. I want to talk a little bit about estimated quarterly tax payments. This is really important and something that a lot of people overlook. To put this into context, if you had a W-2 job where you were paid hourly or a salary, your employer would be withholding taxes from every single paycheck, whether that's monthly, biweekly. Every quarter, your employer is going to remit that amount to the IRS. Because we're self-employed, no such withholding is being made. We have to make quarterly estimated tax payments to the IRS and also to any state or local government if we live in a jurisdiction like New York with a state and local tax. Estimated quarterly tax payments are typically due 2 weeks after the tax quarter ends. I want you to keep in mind that tax quarters for estimated payments do not line up with calendar quarters. There's actually 3 months in the first tax quarter, and there's 2 months in the second and 4 months in the fourth. For 2024, our estimated taxes for the first quarter are due April 15th. For the second quarter are due June 17th. for the third quarter are due September 16th, and for the fourth quarter are due January 15th of 2025. TurboTax is a really easy to use tool where you can put in your income and expenses every quarter, and it will calculate your estimated quarterly tax payment, both federal and state and local. If you live in a city like New York, as I mentioned, you're gonna have to pay your federal estimated taxes, which everybody has to pay, no matter where you live. You're gonna do this on irs.gov. And that's the federal government website. There should be a link to estimated tax payment. You just follow the instructions and you make your payment, and there's a documentation of that throughout the year. And when you file your taxes at the end of the year, you're going to report your quarterly estimated tax payments, and that's going to reduce the amount that you owe at the end of the year. If you live in a city and state like New York, you're also going to have to make state and local tax payments. You obviously don't have to make these payments if you live in a state like Texas or Florida that doesn't have a state or local income tax. But for those of us who live in a city like New York, you're going to find the respective Department of Finance and Taxation for your state and city. In New York, as an example, that's the New York State Department of Taxation and Finance. On the nys.gov website, similar to the irs.gov website, there are instructions and there's a link to make your estimated tax payment. This is usually the point where people ask me, well, Mia, what happens if I just wait until the end of the year to pay all my taxes? That's a really bad idea, because you're going to owe interest and penalties on the estimated tax payments that you didn't make throughout the year. That might have been a very small number in 2022 because interest rates were like zero, but now those interest and penalty payments are tied to the federal prime rate, which is obviously much higher right now. You're gonna owe interest and penalties of, I think it's like 8% in 2024 for estimated tax payments that you don't make. I think it was something similar for 2023 as well. Those interest and penalties can really add up if you don't make your quarterly estimated tax payments. You don't wanna be there. Make your quarterly estimated tax. Another tip that I wanna share with people is if you hate bookkeeping and it's tough to pull out your work from personal expenses, one really easy trick is to open a separate bank account and a separate credit card, and you use that just for work. Even if you don't have a business registration, you can just open a separate personal account and use that one specifically for work. That way you know that everything that runs through that account and on that credit card is a work revenue or a work expense. The last thing I want to talk about for this part one of a three-part tax episode are self-employment taxes. Self-employment taxes are taxes that small business owners and self-employed individuals have to pay to support the Social Security and Medicare programs. Again, if you had a W-2 job, your employer would pay one half of this for you. Since you are your own employer as a self-employed sex worker, you have to pay the federal government an additional 15.3%, 12.4% for Social Security, and 2.9% for Medicare on income of up to about $160,000 for self-employment income. I'm gonna end it here for part one of three of my three-part episode on taxes. I'm Mia Lee. You can take the girl off Wall Street, but you can't take the banker out of the whore. Drop me your comments, questions, and suggestions for future content. But on this one, wait until the end of the three parts before you drop your questions, because I might answer them in a subsequent episode.